Hi, and welcome back to today's Lunch and Learn with the Founders Office. Today, you get Candace Powell and myself with our special guest, Kevin Petersen. Kevin, thanks for joining us. We're so lucky. We've had Kevin before, but Candace and I have not had a chance to kind of just steal him aside and have a really tailored discussion with him about capital raise. And that's what we're going to do today. Kevin has his securities licenses. He has done plenty of fundraising campaigns, and we'll talk about some of the good, bad, and ugly on that today. And he is great at connections. He also runs a mastermind, and we're going to hear all about it. So, we're planning on discussing structures, decisions, safeguards, and things that can strengthen enterprise value, increase investor confidence, and help investors avoid costly mistakes before they happen, especially in light of raising capital. So, if you're building a company, raising capital, or even just planning for long-term success, we're hoping that this conversation can provide some pretty practical insights for founders before it's too late. Kevin, thanks for joining us. That's a big intro. Where should we start?
It's awesome. Yeah, thank you so much for having me back on. I'm very excited to be back on with your team. It's fantastic every time. It's always fun and informative and we actually I think people can tell that we actually do have a lot of fun with this. So, and that's an important note, right? So, and I will share
I
with you a motto that we tout in our mastermind community is have fun, make money, and do good. If you do
have
those three
fun,
things, then your
make
compass is
money,
right.
do good. That's a great combo. That's a perfect combo,
I
actually.
like that have fun is first. In fact, I think you need to hold up what you got this morning as a surprise
I will
in
do.
your
Yeah, so for context here, there's a brand new co-work space that just opened up in Reno called Kiln, Kiln. And it's like proper, I've been saying it's proper Silicon Valley style co-work space, meaning there's a lot of open area, a lot of really common area. Like the kitchen and break room area is fantastic. There's a podcast studio here. There's a full auditorium. I'm actually hosting a meetup. I'm the first group holding a conference in the auditorium the next 2 days. From it's a spinoff from the Sastermond. But yeah, Candace, the funny story that I was sharing just as we were jumping on the call is I know a few people who have offices on this floor. And so we were joking during a kiln orientation day a couple months ago when it was still under construction. They called it the hard hat tour. We actually had to wear hard hats to, see the building that was in progress. And I was joking with some of the people that I know here that we'd be able to have Nerf gun fights on the second floor. So today's the first day I was allowed into the office. The building opened on Monday, and now we're in our offices. And on my desk was a multi, I don't know what you call it, multi-chamber Nerf
That looks like you
seriously
haven't fired it yet.
a legit
have
first.
done. Yeah, that's pretty powerful.
That is, yeah, that
And
could hurt.
so, but unfortunately, this gentleman that I know he's going to be sitting directly across from me. He also has one on his desk. So it's not exclusive to me. We're all armed with Nerf pellets.
I
So
love
it's going to
that.
be good fun.
I love that for so many reasons. One, it highlights that businesses like this, so and Kiln's in a bunch of states, they're expanding and kind of really adding some new life into that model. But the idea that this multi-state business, and I'm not sure if it's a franchise, but that they would listen to their customer base and do something like that personal, that adds that personal touch. And look at now, this story continues to spread. It shows that still, even in the world of high tech, we still yearn for those personal touches. And I think that's just a really powerful start to your relationship with Kiln. And now I'm sitting here going, I should be looking at this. This is great. I love that they did that.
Yeah, me too. Good fun for sure.
hmm So Jackie and I wanted you on today, and we're really excited to have you because a lot of the people that attend these webinars are either that one, many are in or in some kind of tech, a lot of SaaS, and a lot are raising capital or considering a capital raise or have done a capital raise and maybe aren't sure about their next round. We do get a lot of questions about some of the logistics of a capital raise, especially when it comes to this type of, a tech product. So we thought nobody better than to have Kevin back on. We work with Kevin on a lot of clients. There's a lot of times where we aren't the right fit to help a client, and Kevin is, and so we co-work on those clients. And wanted to have you come on and kind of, we talked a little bit beforehand about some of the best practices. And I know you've got better ideas on what to share even with the audience, but I do want to open it up. This is a great opportunity to plug some of those questions into the chat, because today is really about getting some great information out on the actual process of capital raise.
Very good. Yeah, thank you. And so, there's really a great collaboration between what you do at Founders Office in terms of prepping people for being fundraising ready. I mean, that's the best way to phrase it is, are you fundraising ready?
Mhm.
Meaning, you know, are do you have the story down? Right? Can you tell the story? Are you good at conveying it? And then do you have the documents to back it up, which is, the pitch deck and the executive summary, the things that lead into conversations with investors to open those doors and get people to the table. And then presentation style, right? And what do you include in a verbal presentation and what do you not include? And then from there, are your financials in order? And even if you're early stage, even if you're day one of a startup, you have to have pro formas. Pro formas are forward-looking financial statements. And it's okay if, well, let me say it this way. I've never met an investor who expected that the pro formas were going to play out exactly as forecasted, right?
But
So
they
no,
want to see something. If I ask
yes.
you how soon can you be in revenue, you gotta, with confidence, tell me what you think and why.
Mhm.
Yes, have an answer.
Yeah.
That's a
An
very important
informed
point.
answer, a thought through,
Yes.
planned answer. Yeah.
Yes. Yeah. So Jackie, that's a great point, and it's a great starting point for this conversation today, really. So investors want to hear that you've thought about anything that they ask. Like they don't expect you to have all the answers. They don't really expect you to be psychic and say like, "Oh, I'm absolutely going to be at this revenue or profitability mark in this amount of time." Or these are exactly the people I'm going to hire, how big my staff is going to be, or these are the technical requirements we're going to have. They don't expect you to have it um, a perfect vision, but they expect you to have a vision. So if they ask you a question about anything about the business, they expect you to have an answer that is not just made up on the fly. Like the worst thing you can say in those situations is, "Wow, what a great question! I never thought of that." Right? If you're pitching an investor, they want you to be able to articulate like, "Hey, thank you for asking that. My team and I have been thinking about it.
Mhm.
We're not sure, and it's okay to be not sure. Like you can say, we're not sure if this is
100%.
exactly right, but the way we're thinking about it is this. This is the vendor we're going to bring in for that, or this is the staffer we're going to hire for that, or this is how we're going to bring that to market, or this is why we think it'll resonate with the marketplace." Like just have answers prepared. They're not going to hold you to it. They're not going to, take you 6 months or 6 years later and say, "Hey, you said that it was going to go this way and it didn't," because that's the nature of business, especially for startup founders.
Well, and
Right?
you let your legal team and your compliance folks help you with the disclosures to add in those buffers and protections. So again, they're not going to hold you to that. We've disclosed up and down, these
Yeah.
are projections, they're forward-looking statements. But I think you're right, Kevin, you've got to have something that is a great first starting point. Not having an answer is not okay. And I will note that like the frameworks, the big capital raise frameworks, like for instance, if you're using a broker dealer, right? Subject to like FINRA, they they have a framework for this. If you're going to use forward-looking statements, you just got to include your assumptions, right? So assuming X, we can be in revenue by this date. Assuming Y, we think, or based on our plan to market, we think given this many customers across this timeline that we can be at this revenue by this date.
Mhm.
It's like Mad Libs, fill in the blank.
It kind of is. And I think, Kevin, you bring up a great point. There is this fine balance, and I do look for it. And I think a lot of investors do. There is a balance between not knowing and then almost also being like overly confident to the point of promissory or not very coachable, which in our side of the fence, we do look for that because we do look for some level of coachability and okay, if that doesn't work out though, can you pivot? Are you able to problem solve? And so founders being able to find that middle ground of knowing their numbers. I can't tell you how many founders get on the call with me and they seem shaky even in some basic numbers. And I don't know if you find that too, Kevin. And I know you do a lot of coaching to get them ready for that, and we do as well. But a lot of times founders come out of the gate and they are a little I can't tell you how many times somebody doesn't actually even know how much money they're raising or how much they have already raised, or the number's a little fuzzy.
Sure. Yeah, and you make a good point about not being overly optimistic or just sugarcoating things. There's no reason to do that ever with an investor. They're not looking for that. They're not looking for pie in the sky. There are acronyms that a lot of first-time fundraisers haven't heard, which is TAM, SAM, SOM, which is an assessment of the market size. And there's a funny thing there where a lot of first-time founders hear those terms and they think that that should be the first thing in their deck. Like, hey,
Mhm.
I'm going into a $10 billion a year
Yep.
market, right? As it turns out, most investors yawn when they hear that. And then for some of them, they're put off by it because they're like, you're not going to capture 70% of a $10 billion market. Like, who are we kidding? Maybe you'll get 1%. And actually, I don't care how big the market is. I care what you personally, founder, can achieve. Tell me what
Mhm.
you can do. Like, don't tell
Mhm.
me it's a $10 billion opportunity. Tell me what you can really put together. And more importantly, why? Like, why are you the right person? So I'm jumping around a little bit, but ultimately investors invest in people, and so the how you convey your vision with credibility and confidence and how you answer questions is critically important, because if somebody will write a check for an investor that they like and believe before they'll invest in somebody that's like, oh, it's a $10 billion a year opportunity, I'm going to capture the whole market, right? Like, I'm going to put all my competitors out of business, right?
And
That's
those
not
seem
what
to
they're
be the
looking for.
numbers they're hyper confident on.
Right. Exactly. Yes. Yeah.
Some of the other stuff's a little fuzzy.
A
And
little
you're
fuzzy.
right.
Yeah.
On the storytelling piece, on the person piece, that is where we align quite a bit. And we start with challenge. So you're totally right. I can't tell you how many pitches I see that kind of go down the Tam Sam Sam, like they think that's what is the forward piece. And you're exactly right. I care about the problem you solve. And that's really what's the most important. I want to understand even, okay, there's a big market. Is there an opportunity in there? What is the challenge? What is it that you're trying to address within this great big number that you just showed me? What is it that you're actually doing in that? What is it that, not even that what you're doing, what is it that needs to be solved? Um, because if there's a pain point, that's a great way to enter into a space. And then, we really go into champion, which is about that solution and, of course, credibility. We want to know that you're the person, and not just that you're the person, that you've surrounded yourself with better, smarter, more talented people than even you to solve it.
Absolutely.
Kevin?
The ability to bring great people together is a huge part of being a founder for successful.
How do you leverage that into, we'll call it like matchmaking or helping a founder identify really who their ideal investor is? I think
Mm.
we've done a lot of education around like not all money is the same. Not all money is good money. Some of it, if it's too impatient and it's not aligned with your purpose and your mission and the timeline that you need to function on, it's probably not worth taking that check. So, how do you leverage, like you mentioned, connections and just this networking? How do you kind of navigate that to find the right investors for the right founder or company?
Yeah, so there's a really very important piece to that puzzle, which is every single investor. It doesn't matter if they're an angel or even if you're on a friends and family round versus a private equity firm or a VC or a family office. Every investor has what they call an investing thesis. Some people even refer to it as a buy box. The buy box is literally a matrix on a landscape 8.5 by 11 sheet that says, here are the things that make a good investment for me. It's in one of these
Mhm.
industries or verticals. It's this size, it's equity or it's debt or it's some combination of, like it's preferred equity or debt with kickers. There's a lot of terms I'm just kind of throwing out that we're probably not going to get into the definitions, but there's a lot of ways to structure capital. And so every investor has their own thesis and they typically never deviate. And the reason is when they deviate from their thesis, bad things happen. So their comfort zone may be one vertical. Like somebody may say, oh, I really know healthcare. So I only invest in things that are related to healthcare. And it can
Mhm.
be loosely related to healthcare. It could be services that support healthcare. It could be healthcare tech. Like there's a lot of angles that could be worked into their thesis. But if you bring them something that's in the restaurant industry and their buy box says healthcare, it's not a match. Never going to be. Similarly, and this is something that happens with clients that I have all the time, where I'm going to get on my soapbox a little bit here for just a second. So, a client comes to me and they say, "Hey, I need to raise this amount of money, and then here's my deck and here's my executive summary. Like, get to work, right?" And I'm like, "Okay, great." So we start digging in deeper, and in a perfect world, they're already working with the founder's office and getting pitch ready. But the one thing that is difficult for me representing a founder is that founders will say to me, just get me in front of somebody. Like, how soon can you get me in front of somebody? I'm like, hmm. So to answer your question, Jackie, it's not as simple as me just sending a text or making a phone call or
Mhm.
saying, "Hey, I met this really cool founder. They've got a great idea. Let's put time on calendar."
Yep.
Because of what, the very question you asked, which is if a if a investor's thesis says our minimum check size, and by the way, anytime I meet a new investor, one of the first questions I ask on the first call is, what's your min max check size? Because
Mhm.
I need to know that if I'm representing founders, I need to know which bucket they're in.
Mhm.
Like if they say, well, our minimum check size is 20 million, we can go up to 100. I can't put somebody in front of them that's raising $2 million as a startup.
Right.
Because if I do, then it hurts my reputation. That
Yeah.
investor will look at me cross-eyed, and after I put the founder in front of them, they're going to call me or text me and say, "What was that?" That's literally what they're going to say. They're going to say, "What was that? Look,
Mhm.
why did you think that was a good idea or a good use of my time?"
They won't take another pitch.
They won't take another pitch.
Mhm.
Exactly. So I can't burn those cycles with investors. So
Mhm.
my job really representing founders for fundraising is knowing, who I have in my network, what their investing thesis is. In a lot of cases, I actually have their actual buy box, the matrix that explains like, okay, this is our strike zone, so to speak.
Cool.
And I only put deals in front of them that are a match because then they appreciate that. Even if they pass, they appreciate that. Oh, wow, Kevin brought in a founder that was really cool, great idea. It all made sense. It was in our buy box. This one might not work for some reason, but at least it actually builds credibility because the next time I reach out to them with the deal, they're going to take the call. And I don't have any problems getting doors open. That's not an issue. And it's because of that. Like I know what a person's investing thesis is, and I'm only bringing them deals that match.
I will second that because we obviously get inundated with pitches. That is we get a lot. And there's some that it feels like they're just like, I know somebody who invests. And like
Right.
I just get pitched all these things that they've zero alignment. I mean, everything from the actual end product to the structure of the investment is completely misaligned. And if you even just looked at what we publicly produce, you would see that it is misaligned with our investment thesis. Um, you are very targeted in who you send us. It is a you send very specific investments to us. And if you do, we take a look because we know already that work has been done, that we know it already aligns. And it is why we feel confident sending people to you because we know that you're doing so much of that pre-work. Because, like you said, a lot of times people, especially in their early raises, their first question is, are there investors in the room? Do you have investors? And that's just the wrong question because they're probably not your investor at the end of the day.
Yeah, that's
So we do appreciate that. So we've got people on this call who, especially with it seems like the emergence of AI, I mean, huge, right? Opening up this whole new world of businesses and automations, and maybe they have been in um, a different type of business before and have done capital raises before, and now they are moving more into that tech space. They're building a SaaS type product because now it is something that they can do because of how much progress we've made in the last 5 years. And this is their first time going out for a capital raise in this environment, and two, in this niche. What do you think some of their first steps should be?
So it's really, honestly, it's the same for any founder in any vertical in any market, right? That investigate the market opportunity. Like you start with your idea, right? And the idea is the spark of inspiration that makes the world of founders work and makes private equity work, or somebody can't sleep at night because they have an idea in their head, right? So take that idea and start researching, like, well, okay, this is cool, but like would somebody pay for this? And I can give you a real world example from my own background with a startup that I launched. This is probably 14 years ago now. I started a music industry platform called Noisy Planet, and it was really like virtual management for unsigned musicians and artists. And so the funny thing is, so I put together a team and we were talking about like, okay, this seems like a cool idea. It seems like somebody would want. But what I did was, and I will share with you, I do tend to put the cart before the horse, so to speak, kind of regularly, right? So in this case with Noisy Planet, I'm like, this seems like a good idea. I'm going to run ads in 4 markets across the US that describe what this service is. And if we even get one phone call from somebody responding to the ad, then I think it's worth even doing. And so
Great.
I done legwork just in case somebody called. Like if we have to flip the on switch, we can build this out pretty quickly. And the team can officially start work and we can launch the website and support the effort. So I ran ads in 4 markets I basically did like north, south, east, and west in the US. And we had 14 calls in the first week. I was like, whoa, okay. We have to do something, right? It's
Build
enough. Because I
it.
said if there was one, we would do it, and there were 14. And then a few days later, somebody from my office called me, and I was driving. I'll never forget this. I was driving, and this woman, Stephanie, said, "Hey, Kevin, we got this package in the mail, and it's addressed to Noisy Planet." And my first thought was, "Oh shit! I'm sorry, didn't mean to swear on your podcast."
It's
I was
okay.
like,
We'll censor it.
I was like, "Oh."
Oh, we'll let it fly.
Right. So I had that reaction. I was like, my first thought was, we're being sued already. Wait, we haven't even launched and we're already being sued. That's what I was thinking. I'm like, all right,
That
open
is
it up.
that is a founder mentality.
Yeah, exactly. Yeah, so I said, okay, open it up. So she opens up the pack and she said, there's a whole customer profile filled out and all the materials we asked for are in the package and there's a check.
Wow.
I was like, there's like for the customer, for our first customer, there wasn't even any evidence that we really existed yet. The website wasn't launched. Like I had one person in the office that answered the phone when they called in response to the ad. And they said, yeah, if you just do X, Y, and Z, then you can, jump on our platform. And they did. And I was like, okay, now it's real. Now we have to actually launch this. So it was a mad scramble, and I didn't sleep for weeks building the website, and it was fantastic. I mean, to just take that one full circle, we ended up with about 10,000 unsigned artists on our platform over a 5 or 6 year period, and we were doing a great service for the music community, and people loved the brand. And so, but anyway, the point of that was really just you go from that spark of inspiration, having an idea, to the next step, which is, well, let's see, let's talk to people who I think might be customers, or let's run an ad and get a response, or let's do an online survey. Like, let's test dip our toes into the water and see if the market exists, and see if we're like, are we just talking to ourselves and selling to ourselves, or will people really understand what we're doing and actually want to pay for it? So you start there.
I think so. I mean, you're totally right because I think there's a big difference between just having an idea or what you think is solving a problem to actually something that people are willing to pay for, right?
Yes.
And that builds the credibility. So for those, pre-revenue businesses, just showing that there's even this that there's this need, this desire, this niche in the market. Um, that's a big component. I love that story. That's hilarious.
Yeah, it was good fun.
I do
Yeah.
want to say if you guys have questions, I see a few hands raised. We've got a Q&A box. You guys can put questions in the Q&A here, and we'll answer those. Um, we had a question a couple weeks ago. We are going to do a full episode on it, but we do get occasionally questions about data room. And I just would love some of your insights into how to, put together and what you look for in a data room.
Yeah. So first and foremost, it has to be well organized and easy to navigate. So don't be afraid to put the most important things in obvious places or obvious folders, or not even have folders. Just have, very clear titles on documents that show that the things that investors will look for most are at their fingertips when they get in. I have actually had investors walk away from deals because, I had the warm up call with the investor and pre sold it to them. I shared the executive summary. They signed an NDA. I sent the deck, scheduled a founder call. After the founder call, the investor was still interested. And then we gave them data room access, and they walked because
Mm-hmm.
Mm.
they texted me. They're like, hey, I just got into the data room. Can't make any sense of it. I'm going to pass. And I'm like,
Mm-hmm.
okay, that that was bad. Like, don't do that. They have to be able to get in, and within seconds, they need to be able to see, like, oh, okay, so here's the executive summary that I already saw. There's the deck that I already saw. Okay, here's the P&L, 3 year
Mm-hmm.
P&Ls or 5 year P&L. Here's the 3 or 5 year pro forma. Here is a copy of the cap table. and the balance sheet. And
This is
here,
a great punch list, Kevin. This is something we could even create a little one pager on and share with people. I think there's sometimes a lot of questions about what do I put in my data room? And for the most part, it's interesting because we talk about consistency, how your story, everyone in the same boat, row in the same direction, singing the same song. You've got to have consistency. And yet, with all that consistency within your internal team, sometimes different audiences want to hear something different, right? Or they're looking for something different. So Ravi has a question in the Q&A. How many pitches should a startup have? 1 page teaser, 5 page short deck, 15 page detailed deck, and then what about the data room? So it kind of goes to that. Where do you strike a balance between kind of like what you're saying, Kevin? These are the must-haves. And yet, different audiences might want to see different things. Kind of how do you strike that balance with accommodation and also, like, here's the nuts and bolts. And also, he said most investors refuse to sign an NDA. How do you share and how much to share with them? I don't like that, but that's the legal side in me. Like, why not sign an NDA? Like, what are your I'm like, I'm suspicious. Like, what are your intentions? Do you find that most investors don't want to sign an NDA?
I wouldn't characterize it that way. I would say that it's becoming more common for mid-size and larger PEs and some VCs to not sign. And the reason that they give is they're like, hey, we literally see 200 decks a week. It's not reasonable for us to sign an NDA that says that we're not like it's unrealistic to think that we're not going to see 5 deals just like it in the next 6 months,
Mm-hmm.
especially if it's in tech. Like, okay, somebody's got an AI solution for I don't know, make something up, right? Fill in a blank. It's not unrealistic. I mean, it is unrealistic in today's market to think that there aren't 10 other people in the world working on the same solution using AI. So I kind of get that. Now, on an individual like angel investor basis or family office or smaller PEs that are being more strategic and looking at fewer deals in a 12-month period, uh, they really should be signing NDAs because those are at that level, they're more likely to have other conversations with other people, maybe unintentionally, where they're either sharing, inadvertently sharing proprietary information with somebody else that actually could actually act on it. So really that's what it comes down to is what can this person act on? Like there have been times that I've put somebody in front of a mid-sized PE and the PE firm doesn't want to sign an NDA
Mm-hmm.
and the founder is uncomfortable. And then usually the way that conversation goes is I say, okay, what are they going to do with it? What if you told them every trade secret you have? What are they going to do with it? Right? Because the truth is, they don't have time to steal your idea and build it. The reason they're looking at investing with you is because you're building it. Like
Mm-hmm.
they want to back you as a founder who's going to take this the distance, and they don't have the time or the infrastructure to do that. And they're looking at so many deals that they're not in the business of stealing ideas and sharing them with other people who can use them. So to me, if there is a friction point there, it really comes down to you know the opportunity and the usage. Like, could they really do anything if we overshare? So, I mean, in a perfect world, everyone would sign an NDA. More often than not, I get pushback on the length of term on the NDA, not the NDA itself. It's like, hey, the year says 3 years. Can we just do 12 months or something like that? I get
I'm
that.
open to that type of thing too, especially because things are moving so fast now and so much development. Like AI is assisting so much development, especially in the tech space, and things are just data's moving, right? If you think about where we were 6 months ago, where we were 3 months ago, even, I'm comfortable with a shorter NDA term as well, Kevin. I appreciate you highlighting that.
And if you pitch to us, a great example, Tom coming from PE and having his own family office, he typically won't sign an NDA. So Jackie and I, well, Jackie reviews them and I'm I'm reasonably okay with it, but it's also, it can be a barrier, like you said. It can actually stop the forward movement. So there is some weight that needs to be considered to that. That's a great point. Do we have, I know we've got, let's see, I saw a few more hands raised. Just want to make sure to let people know the chat. And if you don't see the chat, you need to expand. There's like a little three dot thing. You can put your questions there. Let's talk a little bit about the Sastermind. We haven't talked too much about that yet. And I think based on the audience that we typically get to this webinar, I think the Sastermind would be of interest to a lot of people that are on this webinar, but they may, some of these things do get addressed and talked about in your Sastermind. So can you give us a little bit on that?
Absolutely. So yeah, we're coming up on our 7-year anniversary. It is a global network of founders and investors. It's clearly weighted in favor of tech. It used to, I mean, the name Sastermind, obviously is the focus, the initial focus on SaaS. But it's kind of a funny thing because several years ago, people just got it and they thought the name was clever and funny and appropriate, and it makes sense, right? Intuitively. Now I find that I'm actually kind of defending the name Sastermind. Like people still love the name, but I have to explain that. Yeah, it's SaaS and generally tech because AI and blockchain are touching everything.
Mm-hmm.
So there are things that are SaaS adjacent that, you know, they don't really fit perfectly in the Sastermind brand name, but if it's tech, we're talking about it, and we have members literally from around the world who are participating. And then I will share a little bit about the structure. So we meet virtually twice a month. So first 2 Wednesdays of every month, where the first Wednesday of every month is a 90-minute call that's focused on all things growth. So growth hacking, growth strategies, which vendors to use, hiring and firing, like right sizing your staff for growth, ad channels, marketing channels. It's everything. And the thing that I share with new members coming in is that the value of the Sastermind is that a founder is never more than 2 degrees of separation from the person they need to talk to next. So we go through, I'll give away my secret sauce here just a little bit, that we go through a process called breakthroughs and blockers. So everybody has a chance to voice their biggest breakthroughs since the last call that they attended, and any blockers that would prevent them from hitting their goals for growth. And if there are blockers, we solve for them in real time. And most of the time, it's somebody on the call saying, "Oh, I had that in my business once, and this is how I solved it." Or "I can do that for you." Or "This is the person you need to talk to, and I'm going to connect you right now."
I
So we
love
we
that.
really do. Yeah, it's pretty. I mean, honestly, I kind of got goosebumps talking about it because it's kind of there's a magic to it for
Yeah.
sure. And for me personally, I love that. I love connecting people in a way that helps them go farther faster.
And
And
watching
so
blockers get removed in real time, where
it's
you're just
amazing.
a facilitator, you've got a container, and someone says, "Here's my problem," and someone else jumps in and says, "Oh, I got you on that. Here's my
Yes.
problem," and someone else says, "Oh, this person knows how to solve that." It is. It's like little fireflies pinging.
There's also
Yes.
something beautiful to this, like high tech, everything you're touching in this Sastermind is tech, automation, and what's solving problems at the end of the day is the human connection. And I
Yes.
think that's really cool that that's something that you've built is
Yes.
even tech, builders need humans to solve these big problems, right? They need other tech builders to help solve these big problems. And I think that's really magical.
Yeah, thank you. And in fact, tomorrow and the next day, I'm running a 2-day workshop here in Reno, and the hot topic for tomorrow's meetup is being human during the AI slop tsunami. We ended up calling it the AI slop tsunami, which
Yes,
I love, and it's a very visual way of describing what's happening right now with AI.
it is.
And so you make a great point that the human connection is still critically important and always will be, in my opinion. So
Absolutely.
yeah, so that's first Wednesday of every month. Second Wednesday of every month is all things fundraising. So it can be capital raising for growth, it could be exit, it could be M&A. And again, we're helping to some extent, like I mean, just I'll just say it, like the founder's office does a much better job of taking people through the process of getting fundraising ready than I'm doing on that once a month call in a group setting. But what we are doing well on that second Wednesday monthly call is helping people get matched and find ways of, I mean, I would say that instead of really doing pitch coaching on those calls, we're really holding up the mirror and saying, is that like, is your valuation right? And this is something we could have talked about earlier on this call, right? Like, I have founders coming in and they're like, oh man, this is the best idea ever. And we're going to raise $20 million at 100 million valuation. I'm like, okay, what do you have? And they're like, nothing, right? Like I was on a Southwest flight and I wrote something down on a napkin and now it's worth $100 million. I'm like, not yet, right? Like I can't put you in front of my investors who look for $100 million cap
Yes.
deals until you've got something a little more substantial. So
Yeah.
I would say that we do a good job of holding up the mirror on those calls and saying like, yeah, you should be talking with this. A lot of it comes down to should you be talking to a PE right now, or should you be talking to family offices, or are you ready for a VC, and what are the implications of that?
That's a
And
great, there's a question in the chat. Love this question. What are the top three red flags that you consistently see or hear when getting pitched? The ones that immediately make you say you're out. I would love to hear from both of you, and I'm sure there's a little bit of overlap, but we've each had our own like, oh hell no. For me, this piece on um Candace, you remember there was a potential founder we were going to work with, and we asked them, who's your ideal investor? And they were a medical office that started describing their ideal client
Yes.
for the medical office. That is very different. Your ideal client, we understand. I understand your product, I understand your offering, I understand your business model, I understand who your ideal client is. But that is not at all what I asked because your ideal client is not necessarily your ideal investor.
Hmm.
Maybe they are, but in this case, that is not at all what I was asking. So that was a huge red flag, not even being aware of like who's out there that, like to Candace's point, that wants to champion the problem you're solving, right? Who is out there that would want to invest and support this and see this come into fruition? Um, my second one would be asking pointed questions. Again, if you're not in revenue yet, if you are in revenue, great, there's a new conversation. If you're not in revenue yet, what's your plan for getting there? How quick? What are your assumptions? What's the timeline? If you're trying to raise 20 million, why? How are you going to use that money? And how does that money get you to being in revenue? If you can't answer that intelligently, I don't know that you're ready to capital raise. So I'd love to hear both of your flags.
yeah, I'll jump in first. So I don't mean to make this seem like you're leading the witness, but the use of funds piece is critically important. And a lot of founders miss that part of their
Hmm.
as part of their pitch. And in fact, and there was an event that you invited me to be on a panel at coming up on a year ago, where one of the funny things that came up repeatedly in this sort of pitch class, so pitch readiness class, was how frequently the ask was not in the deck. Right.
Yeah.
So
Yes.
somebody goes through a whole explanation,
Yep.
like, here's my idea, there's why I'm the right person for it, this is what the marketplace looks like. These are like, this is my cute marketing idea, and this is where we're going with the brand. But they never get to the point where they're saying, and I need $5 million to get there because of A, B, and C. And
Hmm.
A, B, and C is called use of funds, right? In the world of fundraising and private equity, it's use of funds. What are use of funds? And if your answer is, well, I want to buy a Lambo, you're not going to get very far, right? It has to be like, well, I need three tech people, and I'm going to need a few marketing people and some sales people, and I'm going to need some accounting people and some legal counsel, right? You need to be able to articulate like not just what the money's being spent on, but ultimately how does that spend turn into revenue and profit. So it's, I mean, and I said the Lambo thing facetiously, but it's not so uncommon, especially for first-time founders, to think like, oh, as soon as they have the money, we're gonna get this really big fancy office, and we're gonna hire these people at really exorbitant salaries. Like the bootstrapping is so far from their mind.
Yeah,
There is, and I had never really talked about this with anybody before, articulated this way, but there is a happy medium between bootstrapping and getting, what a founder would call full funding. Like, oh, we have all the funding we need to hit our mark. And so I think as an investor, what you want to see is that there's been deliberate thought put into the plan. That's really the most important thing. And if if a really fancy office makes sense because you're seeing clients there that are enterprise clients writing 7 or 8 figure contracts, maybe it makes sense. But what people want to see is, okay, does this pass the sniff test? Like, if is your use of funds making sense, and can that turn into, well, return on investment? It's not just a private equity investment is not funny money.
right.
It's money that somebody else had to earn
Yes.
to
Yep.
invest with you,
Yep.
and they're accepting a reasonable level of risk in order to get a return. And
Hmm.
so when you talk about the ask and a pitch and the use of funds, you should be ridiculously deliberate about how you answer that question.
I will second that. And I mean, I think I said it at the top of the show. There's so many times where people come to the table and they don't even really have a good idea of what they're raising, how much they're raising. They give me kind of this range. And I'm like, if you don't have clarity in that and your use of funds, how do I trust that you're going to be a good steward of this, this investment? I do agree with that. A lot of times, and if you pitch to our group at all, our first thing, and we have it really publicly out there, is the problem you solve. And I can't tell you how many times people come to us and they can't even articulate the problem that they solve. And that's a quick conversation ender with us if you just can't get to the problem that you solve. And I think it goes back to our investment thesis. If it's not within, if you're pitching to me and you didn't research anything about us, we've got it. It's pretty clear out there about what we invest in, what we look for, and what we will do. And I still get pitched a lot on products that I wouldn't participate in. Like Kevin said, every time I have gone outside of our investment thesis, it has not ended well. We we do make the mistake. We like to relearn that lesson occasionally. And every single time we've learned the same lesson again and again and again of why we don't do that. We now have better checks and balances to even hold our own selves accountable for, nope, this is not something we do. Um, and so those are red flags because it means you didn't do the research on us as the potential investor. It means that just tells me you aren't quite there yet. You haven't gotten an expert in like a Kevin who's really teaching you the proper way to go about a fundraise. If you're not looking for good investors, and the reason that is a red flag even further is because it makes me question what other investors are on that cap table. Because investors can actually tear down a whole structure real quick. And so if you're not doing research on me, it means you're not doing research on the other investors. And I have concerns about who I'm playing with on the playground.
I think
So
this could be a whole nother conversation, actually. Angela, will you share Kevin's contact information one more time in case anyone in the audience or any of our listeners is interested in checking out that Sastermind and getting more info? Um, Antonio had a great comment in the Q&A. I'm not sure if it's like publicly viewed by everyone, but basically on NDAs, He suggests that if an NDA is needed to protect your idea, you may not have anything unique in your idea. He says instead focus on your defensible moat. He said they're raising capital and know their defensible moat's really the team and the specific knowledge and relationships. And they had a wealthy person pretend to want to invest. They learned as much as possible and then tried replicating what they heard, spending tens of millions and utterly failing because they didn't have the team knowledge, experience, and relationships. So, super valid point of view. And then Ravi has another awesome question. Are you seeing a lot of safe and convertible debt for the first round of a smaller amount and then a larger raise with VC valuation? How do you drive a credible valuation? I would love to spend an entire lunch and learn on this topic, talking about cap tables, talking about structures, talking about I know Tom has some strong opinions on safe agreements, convertible debt, different structures, different approaches, or like tranched raises. So, Angela, I'll grab this and let's make this a topic of a future lunch and learn. It's been a pleasure having you, Kevin. Thank you, everyone, for joining us today. And thank you for your thoughtful questions. It gets so fun and we never know exactly what might pop up. So,
And
super
we
fun.
did put the Sastermind link into the chat. So if you're interested in learning more about Sastermind, please take a look in the chat. The link is there. It's sastermind.net. And so please take a click there, and add that human element to your tech business.
Yeah, thank you so much for having me on. Do we have 30 seconds for one very quick relevant story?
Please.
So years ago, when I was consulting in financial services, I was working on a project at Charles Schwab, and I had to go into a senior executive's office one day to pitch a program that I was working on. And I walked into the office, and she looked up from her desk and she said, "Be bright, be brief, be gone." And that has stuck with me for 25 years.
Say it
And
again. Say
it's
it again.
be bright, be brief, be gone. So for all of those founders out there who are listening and thinking about like, how do I pitch? It's that. Be bright, be brief, be gone. You get in front of somebody, be your authentic, brilliant self. Keep it as simple as you can, and then shut up. So I thought as a closing comment or parting wisdom today, I wanted to
I
share.
love that so much. I kind of want it on a t-shirt or a
Yeah,
mug.
no kidding,
Huge.
right?
And it also
Right.
shows respect for the person's time.
Yes.
It's, sometimes we'll have a 20-minute call book. That's all you get with us. And if you've barely gotten into anything in that call and you've had 20 minutes to get there, it's not looking good for you to get a follow-up. Awesome. Love that. Thank you, Kevin. Thanks everybody for attending today. The stuff goes out. You can rewatch if you want. We look forward to seeing you all next week. I believe Papa P will be back with us. I'm not totally sure, but here is how you can contact us at the founder's office. And thank you so much. Let's have a great week.